When we think about what a company is really worth, we usually jump to profits and assets, right? But there's this powerful, kind of hidden force at play, and that's what we all think and feel about a brand. Today, we're going to dig into the direct line connecting a company's reputation to its actual real-world financial performance. So that brings us to the big question, the central puzzle we're trying to solve here. Can you actually put a price tag on public opinion? I mean, how do a bunch of tweets, some news headlines, or a big scandal actually translate into cold, hard cash on a balance sheet? That's exactly what we're going to break down. Okay, so before we can connect those dots to the dollar signs, we've got to get our terms straight. You'll hear the words reputation and perception thrown around, and they might sound like the same thing, but trust me, they're not. And that difference, it's absolutely crucial. Here's an easy way to think about it. Brand reputation, that's like a company's core identity. It's the character they've built over years and years. Public perception, on the other hand, is a lot more like the daily weather forecast. It's the public's mood right now, and it can change in a flash based on whatever's happening in the news. So let's dive a little deeper into brand reputation. This is the big picture, right? It's that gut feeling or the first thing that pops into your head when you hear a company's name. The source uses a perfect example, Apple. For decades, they have hammered home this reputation for innovation and sleek, high-quality products. That feeling, that's their reputation. Now, public perception is way more immediate. It's way more volatile. It's the sentiment of the moment, and it gets shaped by pretty much everything, from a viral post on social media to a huge story on the nightly news. It's how people feel about a company right now, and it is always, always moving. All right, so we've got our definitions down. Now let's get to the main event. How does something as fuzzy as a feeling or perception actually turn into hard cash on the bottom line? Let's follow the money.
And here it is. This is the core idea of this whole explainer. This isn't some fringe theory. It is a fundamental truth of the modern market. What people think about a company has a direct, and I mean measurable, effect on its financial health. Period. And this is where it gets really cool. A strong reputation kicks off this amazing chain reaction. So first, it pulls in more customers, right? That means more sales, higher revenue. Well, that success boosts investor confidence, which helps drive up the stock price. And finally, a great reputation makes it so much easier to hire the best people and lock in those key partnerships. It literally strengthens the company from the inside out. So we know that what happens in the news can really move the needle. Let's take a look at the two sides of that coin, the kind of headlines that can either build a company into a giant or, well, tear it all down.
On the negative side, the dangers are pretty obvious. A big product recall? Poof, trust in your quality is gone. A scandal involving the CEO? That raises huge ethical red flags for everyone. And things like data breaches or lawsuits, they come with massive costs, both in real money and in reputation. Any one of these can send public perception and the stock price into a nosedive. But on the flip side, positive news is like rocket fuel, a smash hit new product, a big industry award, or a really solid sustainability plan. These things signal that a company is healthy, competent, and heading in the right direction. And that attracts both happy customers and eager investors, cementing the company's spot in the market. Okay, so to see how all these different forces really slam together in the real world, let's look at a case study that just perfectly captures this tension. Tesla. You've got this fascinating split. On one hand, Tesla has this incredibly powerful brand reputation, right? It's all built on groundbreaking innovation in electric vehicles and just gobbling up market share. This creates huge loyalty and massive investor interest. But on the other hand, the company is constantly dealing with these hits to its public perception. Everything from its CEO's controversial statements to serious concerns about product safety. So what's the financial takeaway here? Well, Tesla's strong brand is a massive asset. It creates real, tangible value, no doubt about it. But all those controversies create a ton of volatility in the stock price, and they pose a serious long-term risk. I mean, can that amazing reputation alone keep the company flying high if negative perception starts to chip away at customer loyalty year after year? That is the billion-dollar question. So after breaking all this down, what's the big takeaway for you? Look, this way of thinking isn't just for Wall Street analysts. It's a really powerful tool for anyone who wants to understand the forces shaping the economy. It's all about learning to read between the lines when you see a news story. And that leads us to our final thought. The next time you see a company making headlines, for good reasons or bad ones, I want you to ask yourself this question. Are you just going to see the headline, Or are you now going to see those invisible shockwaves it's sending through their revenue, their stock price, and their entire future? Thank you for watching, friends. Before you go, please drop a comment and let me know which stock or sector you'd like to see us analyze next. I promise I read all of your comments. And yeah, here on your analyzer, we don't just talk about stocks. We actually explain and teach you every fundamental ratio in detail, so you can learn to analyze these companies yourself. So for more deep dives and market insights like this, go ahead and subscribe to the channel now, and don't forget to hit that bell icon. Thanks for watching, and I'll see you soon.
Disclaimer. Educational content only. Not SEBI registered. This is not a buy/sell recommendation. Invest at your own risk.